guys, so in this video we are going to go over the daily cycle of what happens each day, so Monday, Tuesday, Wednesday, Thursday, Friday in the market, just identifying the market movements and as well as looking at the time sessions and also looking at currency correlation. So I've mentioned this very vague in my other videos of currency correlation. So basically what the benefits are of them and how they can help you is they basically form a basis for a higher chance of winning on your trade setup. So you can avoid positions where they cancel each other out, and then as well as like risking a certain amount of money. So for example, if you bought the same currency pairs with a strong correlation, then you're being like exposed to more risk. So those are the things you can kind of get when you are correlating with other pairs. So for example, GBP USD, you can pick any currency pair that you think correlates with that. So another thing you can do is go on Google and type in currency correlation, and it will give you exactly what percentage of currency pairs are positive and what are negative. So for Euro USD and GBP USD, they are about 90% correlated, so that means it's a positive correlation. So this just shows you, we're looking at GBP USD and we're just comparing Euro USD, and it's just showing you exactly how it's moving. So like I said, it's pretty much the same. So however, if we looked at USD CAD versus AUD USD or something like that, they have a negative correlation, pretty high negative correlation. But again, you can go on Google, type in currency correlation, and you can get the chart of what's positive and what's negative, and that will help you with your risk. So talking about commodities correlated with certain currencies, so gold and USD have a negative correlation. So when gold goes up, the US dollar is weak, so it goes down. Gold is a safe haven, as well as JPY, the yen. So sometimes they're correlated as well. Euro and the dollar index have a complete negative correlation. So when euro is up, the US dollar is down, which is what I talked about. And then CAD with the US oil has a positive correlation because Canada is a major oil producer. So they're one of the top. And then as well as AUD and gold, they have a positive correlation because Australia is a significant gold producer. So these are the things that might give you a little bit of an edge to when you're trading. So you want to avoid trading the same ones if they have positive correlation, just because you're doubling your risk, right? So that's kind of what you can go through. You can compare, and you can compare any currency that you want, to be honest. So that's totally up to you. So I just wanted to quickly show you that. Again, I talked about that before, but I kind of wanted to go over it again. So going over days, the daily cycle, what we want to do is we just want to identify how the market is moving, because that will give us an edge too with our trading plan. So looking at GBP USD on the 1 hour time frame, we are looking at April 22nd, 2019. So let me just pull that up. Okay, so April 22nd is a Monday. Okay, so this is Sunday. Here, we'll just highlight these in different boxes. We'll do a better color than that. That's good. Okay, so for this, we are going to highlight the days. So for April 21st, so right around here, this was Sunday. Okay, so this was Sunday, and then in comes Monday. So Monday is April 22nd. So all of this is Monday. We're gonna make that a different color. Okay, so the 22nd, Monday, and then in comes Tuesday. So Monday we close, then Tuesday we push up, and then move all the way down. So here's where Tuesday ends. Okay, and then we have Wednesday. I'm just outlining this for you guys so that you can see like exactly how the market's moving on certain days. So then we have Wednesday kick in on the 24th. Okay, and then the 25th hits, which is Thursday. So here is the 25th. Okay, and then the 26th hasn't happened. So Sunday, Monday, Tuesday, Wednesday, Thursday. So what's happening here is Sunday, Monday, we have a ranging market. Tuesday comes in, pushes price up, then rejects. Tuesday drops price. Wednesday, we get a correction. Wednesday drops price. Thursday continues to drop price. And then Friday starts correcting. So let's see basically if we can break this structure. So this is, we're on the 1 hour time frame, so we can go to the 4 hour and just see what's happening here. So what ended up happening here in this situation is we are in a downtrend. So what ended up happening is price came up, ranged for a bit, Tuesday brought price up, and then it completely went down. So we were testing structure around this level. So structure broke, tested, then wicked here, then completely dropped. Okay, so then if we look to the left, we can see that price respected this area right here. So it filled this gap area. So what we can do is we can just highlight this move. Okay, so what ended up happening is it respected that. Okay, so now we can see that since price has been dropping, we can kind of see, okay, are we going to reverse? So this is the 25th, this is Thursday. So let's see if Friday brings it up. Let's go on the 1 hour. Okay, so this is a fake out. It closed above structure, so let's just see what happens here. Came down to test structure again. Okay, so what ended up happening is this was Thursday, okay, and then Friday comes in, so Thursday, and then Friday comes in after. 26th. That's Friday. Okay, so this is kind of what we can figure out when you are back testing and when you're looking at your trading plan and all that kind of stuff. You can see how the market moves each day. So we have Sunday, Monday, Tuesday, Wednesday, Thursday, Friday. So what ended up happening is we are in a range on Sunday, Monday, which usually is what happens. The market opens, the market makers try and find a position, and then start risking the most amount of monies on certain price zones. So what ends up happening is it touches this 1.30 area, 1.302, and then completely rejects because it's respecting structure to the left. So this happened on Tuesday. Tuesday, the market goes down, then comes back up, then continues down. This is Thursday. Then we get a fake out. We get a test here. Price comes down, tries to break below. This is kind of like manipulation, and then comes right back up. So again, even if you had your stop loss, let's say you had a long position here, and your first target was this minor resistance right here. Your next target was up here. Even if you had a stop loss like right below structure here, so a 20 pip stop loss, you still would have been good for this move, okay? So again, Thursday brought it down to that support, then it started reversing Thursday coming into Friday. So this is really, really good to go over and study, because then you can kind of figure out how the market is moving on what time and what day. So then we bring in this sessions tool, and we can see exactly what happened. So what ended up happening on Tuesday, London session comes in. So the green is London. London session comes in. So London session started about 2 a.m. So 2, 3, 4 a.m. comes, then New York starts, okay? So once New York starts, price comes down. New York pushes price down. Then it starts ranging for Tokyo session, for Asian session. London comes in, brings it back up. New York session comes in, brings it down. Then Tokyo moves sideways. London session continues it up, and then New York says, nope, I want to have it at this price, so they move it up. Then it comes back down to correct, so on and so on. So it's just repeating itself every single time. So once you understand sessions and how it moves on certain days, that's a really, really big edge for you in trading. So you want a trading edge completely so you can figure out exactly how to become consistent with your trading plan. Like, that's really important. So what ended up happening here is price corrected at this level, then came up. This was our first target, and then if we're looking at the 4-hour time frame, we can see this big correction. So our first take profit was here. Our second is up in this range. There's a lot of rejection in this area, so let's just see what happens. Okay, so it comes down and tests structure, then closes with a pin bar rejection, saying, okay, it's still bullish. Then the buyers come in, come back down. So we ended up going to major resistance here. Price respected, came back down, and then looks like we're breaking to the low. Yep. So we end up breaking to the low. Okay, so let's just see what happens. Let's go on the 1 hour. Okay, so back to days. We are looking at the 28th. So the weekend hits, then the 28th comes in. Okay, so this is Sunday. Okay, so Sunday comes in, 28th. Okay, so this is Sunday. Here, I'm just gonna grab this actually. Oops. This is Sunday. Then the 29th comes in, which is Monday. So Monday goes to here. Okay, so this is Monday's movement. Then we have Tuesday come in. I know this is kind of boring, but again, this is really, really important that you understand this and that you know how to highlight it. So then 30th comes in, which is Tuesday. This is Tuesday. Okay, so it stops here. Okay, so that's all of Tuesday's movement. And then Wednesday comes in, which is the 1st of May. Okay, so Thursday, which is May 3rd. Or sorry, May 2nd is Thursday. Okay, and then Friday comes in. Which is the 3rd. So May 3rd, this is what happens. Okay, so right here. Okay, so in this scenario, we have Sunday, Monday, Tuesday, Wednesday, Thursday, Friday. Okay, so use this when you're back testing. Seriously, it helps so much because you'll understand how the market moves and how it corrects and what days it corrects and what times it corrects. This is really, really valuable for your trading. Okay? Okay, so study this and let me know what you think of it. Seriously, when you're going through it and figuring out the days and times and stuff like that, if you understand it, then great. But if you don't, let me know. But really, really use this in your trading plan to figure out, okay, if I enter at this zone, what time is it at? What day is it happening at? Because you can see the market's trying to make a certain pattern here. Like it moves down at a certain time, then corrects on a certain day and time, stuff like that. So make sure you're studying that.